2024 gave us an extra day in February, but that didn't seem to help my portfolio. I received a few dividends this month, with a new high from my biggest position in Realty Income. The portfolio is sitting at around £13,500. I'm going to show you the dividends I received in February 2024 and the performance of my portfolio. I'm also going to show you the buys that I've made this month. Let's get into it. Let's first take a look at the performance of the major markets. The S&P 500 was up 3.6% in February, continuing on its run up, so sentiment still seems to be good. This month, we also had top performance from Nvidia, which ran the global news this whole month. The whole of the world was waiting on Nvidia's quarterly results, and the S&P 500 specifically was hinged on the results of this quarterly report, and Nvidia didn't disappoint. They've continued on their amazing run, and you can see here when they released their quarterly report. They took a dip a few days before they released their report, but this is just people getting scared and selling out. And then you can see the huge spike after their earnings call. The US market seems to be running on momentum from these big tech stocks, and mainly Nvidia. But with the recent inflation data from the US showing that inflation is slowing down, we saw a 1% spike on Thursday and Friday in the markets, the last day of February and the first day of March. The FTSE 100, on the other hand, has been quite flat over the last month. The news that inflation hadn't changed in January was released in the middle of February, and this gave the outlook that interest rates would be higher for longer. So this boosted finance-related stocks in the FTSE. My positions in Lloyds and Aviva did quite well throughout February, but the rest of the market was still reeling from the poor inflation news. The UK markets are still not as bullish compared to the US. Let's move on to the dividend income I received this month. So on the 15th, I actually received 2 dividends. The first of those was from Apple. Apple is a consumer tech giant. They have around 50% of the US market share and around 20% of the world market share, and that's just with the iPhone. There was news last year of the Chinese government cracking down on iPhone usage, but this was only a small percent of the population, so it didn't really affect the China market that much for Apple. Last year, Apple released the iPhone 15, and this seemed to be a success, but this did show some cracks in Apple's market, and there are studies showing that people only upgrade their smartphone to a new version every 2 to 3 years. Apple also released their Apple Vision Pro in February, which I talked about in my last update video. I said that this could boost their stock price, but since this release on the 2nd of February, their stock has actually been on a decline. I do think that the Apple Vision series will take the market in the future, but as of yet, it's too expensive for the general market, and I think they're going to struggle to get millions of people to adopt this new technology. I recently did a video on the Magnificent 7 where I talk about, is it worth buying the tech stocks at these prices? And it's clear to me now that some tech stocks are going to continue on this run, but Apple doesn't seem to be keeping up with the competition. Apple pay a small dividend, the yield is around 0.5%, but they do grow this by about 5 to 10% per year. And if the growth in the company slows, this may also slow down a bit. With my 3.2 shares in Apple, I was paid 51 pence in February. The other dividend I received on the 15th was from Realty Income. This is a monthly dividend payer, so we'll be seeing this every month. Realty Income is an American real estate investment trust, or REIT. They invest in commercial real estate and has tenants such as B&Q and Tesco here in the UK, and some other big names in the US. The price is currently sitting at $52, and the stock was at a low in November last year, and has recovered quite well since then. Due to the recent inflation news, it's actually been quite bad for the stock, as it's clear that interest rate cuts will be later on in the year, and this is affecting the debt that Realty Income has. I do believe that this company will do very well when interest rates begin to come down, as big investors switch their holdings from bonds over to these strong dividend paying companies. Their performance hasn't been great in the last month, down 3.6%, but this has proved a great buying opportunity for me. My position is currently down 10%, but it won't be long before the price recovers when interest rates start to come down. I've invested about £2,000 into Realty Income, and my position is down about £220, but this is my biggest position by far, taking up about 14% of the portfolio, which is growing as I've continued to add to the position. I've added about £400 in February. The current dividend yield is around 6%, and with my 33.9 shares in Realty Income, I was paid £5.87 in February. I did only receive 2 dividends in February, but this is similar to my dividends last February, where I didn't receive much. I think maybe I'll have a look at some stocks that will pay dividends in February so that this update is a little bit more interesting. My total dividends for the month of February was £6.38. Let's now take a look at the portfolio in depth. So this is the investment dashboard. It basically tracks all of my portfolio. There's also the dividend dashboard, which I'll show you in a second. But if we go back to the investment dashboard, you can see here I have 14 holdings in the portfolio. My split between US and UK is around 55-45%. That explains why my dividends are quite low. A lot of my investing is into big tech companies that either don't pay a dividend or pay a very small dividend. You can see here on this graph that my biggest biggest winners are US tech stocks, which is Google, Amazon, and Microsoft. Google and Amazon don't even pay a dividend, and Microsoft pay a very small dividend. If we look in the top right, you can see my cash holding is around £1,200. I'm trying to keep it around 10 to 15% of the portfolio, just so that I can buy into stocks if they are quite low. The portfolio value is around £13,500, with about £12,300 invested into stocks. My total return so far is 8.86%. Total dividends received in the portfolio is £261.10. This month, £6.38 in dividends. My actual yield is 2.12%, even though my average dividend yield is around 3 to 4%, and my total return so far in the portfolio is £1,000. If we now take a look at the dividend dashboard, we can see that I've now overtaken my first year of dividends received in my second year. So I'm actually 6 months into my second year of investing, and I've already overtaken my first year of dividends. From September to August, my highest was £22.20, and from September, which is the start of my second year of dividends, my highest was £39.54. You can see it looks like it's declining, but when we get to March, which is next month, there'll be a bigger spike, probably more than what I received in January or even November. You can also see that my total dividends for 2024 is £29.35. My total dividends for 2023 was £216. My portfolio value is continuing to grow. As you can see, we're at all-time highs. If we take a look at this graph over here on the bottom right, which is the dividends per sector, you can see that my biggest dividend sector is actually healthcare, which is from GSK, and my second biggest is real estate, which is basically from Realty Income. So Realty Income makes up about a quarter of my dividend income so far. So this yellow box here is the live off dividends date. Based on my portfolio size and my average dividends, it calculates when I'll be able to retire on dividends, which is calculated at December 2057. It seems like quite far away, but I think as my portfolio grows, it should speed up a little bit. So we'll see what happens with that date going forward. There are other features of the sheet. So you can see your dividends per day. You can see your dividends month to month from each company. So you can see I only received 2 dividends this month. And when we go back to February last year, I only received 1 dividend. But if we have a look for what we might receive in March, last month we received dividends from 6 companies. Next month we won't receive anything from Intel because I sold out of that company, but we'll also receive a dividend from VWRL, which is an ETF that I hold. So I think I will be receiving 6 dividends in March as well. And those positions are all bigger now a year on, so I should receive a lot more from each one of those dividends. If we come to the tab transactions month on month, we can actually see the buys that I've been making in the month. So in February, you can see here that I added £400 to my Realty Income position. I added £100 to Amazon. I added £100 to the FTSE All World ETF. And I also added £100 to my Apple position. So if we now take a look at the info tab, we can see all of my positions, their position sizes, how much I've invested, how much their current value is, the gain or loss in terms of the percent, and the gain or loss in terms of pound value. My biggest position, Realty Income, is £2,000 invested, but I'm currently down £228 in that position, which is about 11.36%. And you can see my biggest gain here is Amazon. So I invested £407. It's currently sitting at £640, and I've made a gain of £232. And if we take a look at my biggest gain in terms of pound value, which is Microsoft, I'm currently up £480 from an initial investment of £847. So if we now take a look at the difference of the spreadsheet versus an actual app. So if we now look at my portfolio on the Freetrade app, we can see that this month my portfolio is up £213. Realty Income, my biggest position, is at 11% down. Microsoft, my second biggest position, at £1,300, is up 57%. GSK, my third biggest position, £1,250, up 21%. My FTSE All World ETF, up 10%. Pepsi, down 6%. Unilever, up about 0.5%. Those are my big 6 positions. And then all my other positions are below £1,000. Google, up 30.82%. SSE, a company that I'm very bullish on, is down 5%. Lloyd's is up 3.65%. Amazon up 58%. Tesco up 10%. Disney is now up 6.3%. My Apple position is just gone negative into the red, down 0.25%. And Aviva, my smallest position, only £100, is up 10.63%. And you can see here on the activity log that I had my dividends from Realty Income and Apple. I had a bit of an interest payment of £1.11. You can see the buys that I made of Amazon, Apple, £400 into Realty Income, and then my 1 share of the FTSE All World ETF. So in my last video, I talked about why I'm leaving Freetrade, and I will be moving away from Freetrade into the future. But I think I'm going to make a video on the changes to ISAs from April. And the changes to ISAs from April 2024 mean that I may not have to move away from Freetrade if I'm also investing into Trading 212. I might actually be able to invest into 2 ISAs at the same time in the same tax year. So look out for that video in the future. That is the end of the video. Thank you for watching this far into the video. If you liked the video, give it a thumbs up. Any suggestions on improvements to the video content or ideas for content going forward, leave a comment below and I'll give you a reply. Also, you can check out the investment dashboard at the link in the description. If you want to know why I'm leaving Freetrade, and going to Trading 212, then check out this video right here. But if you want to know why it's bad to invest in the UK, then check out this video right here.